What a time to be alive. What's going on, guys? It's Justin from Push and Profit, and in this video we're going to be talking about ticker symbol TRCH, which is Torchlight Energy, and we're going to be covering about a few things that recently happened, along with a game plan on what to do if you're either in the stock or if you plan on buying into the stock, right? Because again, when it comes to trading, you want to execute a plan, right? You want to come up with a plan and then execute, right? So the company has announced the merger that's going to be taking place with Metamaterial, which has driven a lot of the excitement with the stock, along with the fact that retail investors had jumped in on the stock prior to the investment or to the announcement of the merger, right? And with the combination of that, you just have this meme stock hysteria and merger excitement just blended together, right? So of course that just creates this major uptrend. I mean, if we kind of just see in the last week, we went from like trading at $3 all the way to $11.70, which comes out to 292%, right? Almost 293%, which is insane returns, right? We just have to acknowledge that, right? And so we also have to talk about the special dividend, right? So if you haven't heard, Torchlight announced that investors are going to receive a special dividend of its Series A preferred stock. And they said the dividend is going to be paid out to shareholders as a record of June 22nd, right? Now, the range of what this dividend could be is still up in the air. So this is, still could be in the range of $1 to $20 per share, which is insane to think about because, we're trading at a level of $4.80 right now, right? So to think that per share you could possibly receive $20, which is more than what an actual share is, just sounds insane, right? But I also want to point out that, if we look at what's going on, we had a little bit of volume here. Then we had a lot more volume here because as people see the gain, or they tend to enter, more volume here. Of course, this day, it kind of just consolidated. We sold off a little, and then we consolidated. And then, of course, some more volume, all the way to the peak. And then we have these selling days where we also have a lot of volume. We could argue that, on this day, on the 21st, on the 22nd, on the 23rd, that was where the most volume had taken place. However, once we go to today, we see that, the activity, right, the trading activity has slowed down, right? It's not doing what it was, in the previous couple of days. We see that we consolidated, right? Now, let's go ahead and talk about a game plan. So, I'm someone who I trade based on technical analysis. I do, take into consideration of the external catalysts that can, affect a stock. But for the most part, I base my decisions on technicals, right? Because it makes things, kind of more logical. I'm not, hoping on anything. So with that being said, I said, when the stock crossed below the exponential moving average, that's a sign to sell. The exponential moving average is this blue line over here. And once we crossed below it, we saw that we sold off. I mapped this area over here as a support, and I said, hey, there's a possibility that we may touch the support and bounce. However, supports don't have to, be stifle stocks from going further down, right? Because at the end of the day, stocks don't have to adhere to supports. They don't have to adhere to resistances. Stocks do whatever they want to do. So the purpose of, making these supports, the purpose of making these resistance, whatever the case may be, is simply to acknowledge what you should do after the stock touches that area, right? Because I think a lot of people, they think, hey, if something sells off, you just buy the dip. And I feel like that is not the best strategy when it comes to trading. I think, you want to, have a little bit more of a strategic, play with things, right? So we saw that, Torchlight in the after hours did touch the support, kind of bounced up, but immediately opened up the next day selling off. And then we said that the simple moving average, which is this green line over here, we said that was the next area of support, and we just broke below it, right? So I said, hey, at this point, we are looking at more of a downtrend, and the next possible support could be this area over here at $3.32. However, today we did just consolidate. We moved sideways, and it was a little tricky because if we go to a 5-minute chart, it looks like we were going to recover because we broke through that resistance because, of course, this ends up being a resistance. and we broke through it. We were above the exponential moving average. So that shows, hey, we're going in an uptrend. And you see, obviously, we did go up in the beginning of the day. And, if we see from where it opened all the way to the top, that was a nice 20%. So if you day traded that, then, congratulations, because that was honestly such a great play. But after we hit this peak of $50.77, it looks like things just went downhill. We crossed below the exponential moving average, and now we're over here, right? So you might be wondering, okay, what next, right? Well, if you're holding onto the stock specifically for the dividend, that might not be the best decision depending on how many shares you have. If you have one share, right? Think about it. If you have one share and this is like, you paid $5, but they're going to give you $20 for the special dividend, then of course it makes sense, right? It 100% makes sense. Do I think they're going to give $20 per share? Very unlikely, but again, that's still up in the air. We don't know. So let's go ahead and map out a few things. So if we draw like a horizontal, line over here, we can see that this is just a nice little support. Because if we zoom out on the 4-hour chart, we see that this was a peak a while ago, back in February, right? So if we could just hold above this area and then bounce above and cross the exponential moving average, kind of like what we did today, but hold above it, then that is a good sign to enter, and I'll probably exit over here at $6. Why are you saying, why would you enter around here and exit here? Well, because I'm very conservative. I don't like to hope, because there's a possibility that we cross above the exponential moving average and we simply maybe touch this resistance and then come back down further, right? We don't know. We still have the merger happening on the 30th, I believe. So that's a possibility that this may run up. So if you're holding on to it, you have to decide, is this a high conviction long-term play that you plan on writing out? And then fine, you could simply do something called dollar cost averaging and simply just keep averaging every time we touch a dip and start bouncing up. That's completely fine. But you have to decide, is this something that you're day trading? Is this something that you're swing trading? Or is this something that you're investing in, right? Now, with my strategy, if we touch this support and bounce above, this area of this exponential moving average, that would be around $5.31. And, and I did not mean to actually draw that line. That'd be at $5.31, and that, selling at the resistance, that's still a 15% gain, which is incredible. So that's pretty much the game plan that I would be following if this does bounce above it. If it does cross below it, then I'm looking at an area of $3.30. However, I'm not gonna lie, I am gonna be a little bit bullish and optimistic, simply just because with the consolidation and the volume that has recently taken place, and still with the merger taking place soon on the 30th, there's a high possibility that this can run up again. So I wouldn't be too surprised. Now, am I going to just make a trade simply because I think it's going to run up? Of course, we don't trade on, guesses. We don't trade on theories and hope. We, just trade on what is presented. And if the opportunity is there, then you're going to want to take place and, take that opportunity. Again, you're going to want to mitigate your risks. And the way to mitigate your risks is by setting up, stop losses, setting up when you're going to take profits. Know when you're going to enter, but as well know when you're going to exit. Right. So hopefully, this video provides a little insight of what my game plan is. But, at the end of the day, maybe your goal is going to be different from mine. Mine is pretty much just either a day trade, a quick scalp, or a swing trade, but nothing more than that. Nothing like a long-term play. That I'm not really interested in this company in the long-term play, as I'm going to be honest, I'm not that familiar with what they, actually do, what they produce, what are their balance sheets. I don't really look into this company that deep, So that's really just my understanding of the stock. Let me know in the comment section below what your thoughts are. Do you think the dividend is going to pay $20 per share, which would be very rare? Or do you think it's going to be like just $1 per share? And are you holding this long term? Are you day trading this, or are you swing trading this? I think, with these plays, especially with a lot of the hysteria that has come in the stock market, again, with ticker symbols like AMC, GME, we can see that it's very lucrative to trade these. Maybe not that lucrative to invest, right? Because these things they kind of go up, they go down, and they crash. Again, AMC or I'm sorry, looking at GM. I'm looking at the wrong ticker. We got to look at GME and not GME. We got to look at GME. So now we're over here. So, the reason I don't, invest in these meme stocks is imagine buying in over here and seeing this big drop and holding on to it. Again, like we're at these levels around here, but it's nowhere near this peak of $514, which was in the beginning of the year, right? And then, we see that we're close to the simple moving average that we could possibly bounce up, as this can be an area of support. But I like to trade these because look at all of these spikes and all these dips. This is something that is like a trader's paradise. Traders, we just love volatility, right? We profit off fluctuation of price. So at the end of the day, maybe my goal may be different from yours. That does not mean that it's wrong. Maybe yours is different from mine. But as long as we know what we're doing and we have a game plan and we adhere to our plan, then at the end of the day, you're most likely going to win if you know what you're going to do, as long as you're mitigating your risk. So with that being said, guys, let me know what you guys think. By the way, I'm using the Weibo platform. The reason I mention that is because probably in most of my videos, I either get a DM or I get someone in the comment section talking about what platform this is. This is a Weibo platform. It's a platform that I do recommend, but not that you absolutely have to use. There's